So we're working on J Knight here. No, yes, J Knight. And I'm just going to do this first video is just basically looking at how to process these adjustments on this spreadsheet. So here are our balance day adjustments on the side of this question. So work along with me and we'll make the adjustments to this spreadsheet and then the next video will be on the general journal. Okay, so the first one is advertising was for a campaign which is to span from May to September. The end of the accounting period is 30th of June and it's suggesting that my advertising figure, which is 1,000, was paid for a campaign which goes from May, June, July, August, September. So how many months was that? 5 months. So that's 5 months worth of advertising there. At the end of this accounting period, which is 30th of June, how many months worth did we consume in this current accounting period? Only 2. The remaining 3 months worth won't be consumed until the next accounting period. So this advertising account needs to be adjusted to reflect 2 months worth of advertising. So what I'm going to do first of all is I'm going to slide over the 1,000 out of the main list, move it over to the side. I'm going to strike through that. I'm going to cross that out so it's a reminder to me physically that that's not the figure I'm going to use. And I'm going to calculate over here 2 months worth of advertising. So that's going to equal, open my brackets, 1,000 divided by 5 to determine how many, or to determine the monthly charge for advertising. And then I'm going to times that by 2 because I want to keep 2 months worth in this current period. So that's 400, and that, you should be able to guess that that's correct, or calculate in your head that 2 months worth of advertising is $400. Now, what did I have to do to the advertising account? What do I have to do to decrease it to 400? What do you do to an expense account to decrease it? You credit an expense account to decrease it. Something else has to be debited and that other account needs to be added to the bottom. What is that? Advertising, I've paid ahead of time, 3 months worth. It's a prepaid expense. So we need to add that to the bottom of our list, prepaid expense. And how much has been prepaid? We paid 1,000, we've only used 400. What was the amount that was prepaid?
600.
Absolutely, Nicholas, 600. So we add the account to the bottom of our list, $600. Any questions? Okay, that's my first adjustment.
Just 600, yeah.
Well, that was the amount. We paid $1,000 in full at the beginning of May. That $1,000 represents 5 months worth of advertising. By June 30, we've only consumed 2 months worth, so that's 400. 600 has been prepaid. 600 belongs to the next accounting period. That's the amount which represents prepaid expenses. Next one, office wages. Office wages are owing of $800. So if I find my wages account, there it is there. I owe $800 on the 30th of June 2010. Now that doesn't mean that I'm overdue in paying my workers. Very few businesses are going to do that. It just means that payday and the end of the accounting period don't coincide. So by the end of the accounting period, the 30th of June, your employees have worked for you to the tune of $800 during those days prior to the payday, and now it's the end of the accounting period. So I'm going to slide this figure over to the other column. I'm going to cross that out and calculate what the wages bill should be, or what the wages should reflect at the end of the accounting period, which is basically $800 more. So I've got to increase that by 800. So if I do a formula, 875 plus 800, by the end of the accounting period, 30th of June, wages should have been 1675. I need to add an account to the bottom. What did I just do to the wages account? Did I increase it or decrease it? I increased it. How do you increase an expense? You debit it. So I debit wages, something's got to be credited. I add it to the bottom, and what is that account? What's the balance day adjustment account? Accrued expense. An accrued expense is $800. That now represents a liability. Any questions?
Yeah, so you did not put any formulas for the bottom price. For those two, 600, 800, you didn't put any.
No. No. Because I worked it out, up here I worked out that advertising was prepaid by 600, so I just keyed in 600. And here, it tells me here that I'm owing 800 in wages, so I just keyed it in. Yeah. Okay, next one. Any other questions, sorry? The new tenant is overdue in sending their rent. The business is owed $2,000. So what kind of account would be attached to that? What is that? Is that an expense account or a revenue account that we're talking here? That's a revenue because the tenant owes us $2,000. So I'm looking for a rent revenue account. Let me know which row it is if you find it. There isn't one. So what do I have to do then? I add it to the bottom. So I know it's a revenue account because it says that the new tenant is overdue. So if you have a tenant, they pay you rent, we receive rent from them, and we are owed $2,000. So it's a revenue account, rent revenue. It's $2,000. What's the other account affected? I've just credited the revenue account to increase it. What's debited? Accrued revenue. $2,000. Questions? No calculations needed there. Yes, Tavanka?
Why didn't you add that to the account receivable account instead of a rent revenue?
Accounts receivable traditionally are those people
Just a stock.
that we sell stock to on credit. That's our definition for an accounts receivable account. So that person who owes us money, they are a tenant. We only ever record the relationship with that person when we receive that rent. Our rent revenue account will increase. We don't record the fact that they owe us, other than at balance day, when we are making sure that all expenses and revenues reflect the amount accrued or earned. So that revenue's been earned this accounting period, so we need to raise that revenue by $2,000. Yes?
So we get the accrued revenue again.
Beg your pardon?
So we should get the accrued revenue account.
Because that revenue is owed to us. It says the business is owed $2,000, so it needs to increase the revenue account. So it's an accrued revenue. Accrued means owing, this time to the business. Last one, a supplier forwarded a cheque for $50 to the business for commission on sales yet to be finalised. Okay, so that's a little, not so much ambiguous, but there's a bit of interpretation that's required there. We've received $50 from a supplier for commission, but the sales have yet not been finalised. Now, a business will receive commission from people that we buy stock from in order to, I suppose, it's a bit of an incentive to encourage our customers to buy their products. So they'll pay us a commission, and that's normally a percentage of how much we sell of their product. Now, we've received this $50, but we haven't finalised how many sales for that, or of that product that we've actually sold. So what does this sound like to you? What kind of an adjustment does that sound? We can cross out expenses. It's not an accrued expense or a prepaid expense because this is a revenue. If we're receiving commission, it's a commission revenue that's involved. So it's either accrued revenue, revenue that we are owed, or unearned revenue, revenue that we've received that we haven't earned yet. So what does it sound like? Unearned. Because we've received it. It's not accrued revenue. Accrued revenue is when you are owed something and you haven't received that amount for it. We have actually received this $50, but it sounds like we haven't earned it yet. It's not been finalised. So is there a commission revenue account here? Yes, it has. There is one there, 2,000. I'm going to slide that amount over and cross it out. $50 has not been earned. We've received it. It's part of that 2,000. Whenever we receive a revenue, it always increases the revenue account. So we've received it. What should that figure be? It's not 2,050 because you're increasing it by 50. Have a read of it. It says a supplier forwarded a cheque. We've actually received the $50, but we have not earned it yet. So it should be 1,950. We need to decrease the $50 from it because we've received it, but we haven't earned it yet. So they've kind of jumped the gun in sending it out to us. Is that okay with everyone? Any questions? All right, so what have I done to the revenue account here to decrease it? What do you do to decrease the revenue account? You debit it. So something has to be credit, and it'll be down here that we have to add the associated account for those kinds of revenues, and it's called unearned revenue. Unearned revenue, $50. Well, there's no such thing as a prepaid revenue. The two revenues are either accrued revenue or unearned revenue. Accrued revenue means we've earned the revenue, but the supplier or the person hasn't sent us a cheque for it yet. So we've earned it in this accounting period. Any accrued revenues need to increase the revenue account. Unearned revenue is the opposite. We've actually received the money, but we haven't earned it in this accounting period. If you receive any revenue, it will increase the revenue account. So we need to go into that revenue account and decrease the revenue by the amount that has been unearned because it doesn't belong in this accounting period. Remember, boys, making these adjustments to expenses and revenues are all about having those accounts reflect a balance, which is the amount earned in the accounting period or accrued in the accounting period in the case of expenses. Yes, Nicholas?
Miss, with that question, I don't see why, I understand the unearned revenue, but at the top, I don't see why it didn't go up by 50 because you received a check, but it hadn't been earned.
But I've just sort of said, every time the business does receive the revenue or does, like a supplier forwarded a check. Now, that isn't today we got that check. That's in the past. Might have been a week ago. We received a check in the mail, $50 for commission. The commission account would have increased then by $50. But we've since realised that that hadn't been finalised.
Okay.
It's a little ambiguous in that second part, but what it basically means is that we've received it, but we haven't earned it yet. So we need to decrease it by that amount.
So, in the next...
Hang on a second. Yes, Robert?
Is stationary an asset or an expense?
that would be
Stationery is an expense, Robert. Let's just stick to what we're talking about here. Yes, Tavanka?
Will that mean that the commission revenue will increase by $50 next accounting period?
Well, next accounting period, the beginning July 1, what do you perform to start the month? Those reversing entries. So that $50 will go back in there because it represents $50 that will be earned in that next accounting period. Boys, if you have trouble with classification of accounts, remember you need to refer to the inside cover of your textbook. All accounts are classified there, which brings us to the next step then in this section here. I'm going to insert a new row here and I'm going to quickly whiz through all these accounts and classify them. Because once you make these adjustments here, you need to classify each of the accounts. Are we ready to start here? Anyone need more time? So insert an extra column here so that we can label these accounts. Can I start? Thanks. Okay, sales is a revenue. Sales returns is also a revenue. It's a contra revenue, so I'm just going to leave it as a revenue because it's certainly not it's nothing else, it's a revenue. Commission revenue. Cost of goods sold is an expense. Advertising expense, obviously an expense. Interest revenue is a revenue. Selling expenses are expenses. These aren't too difficult, these ones. They actually label themselves. Office wages is an expense, so is stationery. Insurance is an expense, electricity an expense, telephone expenses. So these are already organised for us. Cash at bank is an asset. Accounts receivable is an asset, inventories asset, land asset, buildings asset, vehicles asset. Accounts payable is a liability. So is GST normally a liability. Just like bank is normally an asset, because we only have one single list of numbers. If cash at bank happens to be an overdraft, it will say after cash at bank, CR for credit balance. Then you know it's not an asset. It's a liability. The same with GST clearing. Always assume that it is a liability, but if it happens to be DR after it, if it says DR here, it's an asset. Mortgage is a liability. Capital is an owner's equity. So is drawings. Prepaid expenses are assets. Accrued expenses are liabilities. Remember, they are owed. Rent revenue is a revenue. Accrued revenue is an asset because we are owed the money from our supplier for services we've performed. Unearned revenue is a liability because we've received money but have yet to supply the service. So we owe that service, therefore that account is a liability. Okay, to make the next step, which is the general journal, a lot easier for us, what we need to do is we need to rearrange these so that all the revenues are together. And I'm just going to hop into that revenue account there where it says the first R, or not revenue, yeah. Just make sure you're positioned in that cell, and then up here we've got our sorting. We can arrange our data in ascending to descending order, but just always check. Sales is 50,000. So we need to check that it's actually moving everything across. So if I reorganise it and hop down to sales, it's 50,000. So it is moving all my rows across, or rearranging them according to rows.
How do you do that?
Did I not just do it?
Yeah, there's,
Do you want me to do it again?
it's not on, yeah, because
Oh, you don't have that there? Okay, so where would that be? I would. Where did you find it, Daniel?
Yeah, sort of filter.
At the end.
Oh, okay.
It's like top right.
Oh, yeah. Oh. Which ribbon are you in? Are you in the home ribbon?
Yeah,
It's on the right, like,
Alright.
yeah, it won't happen on yours.
Oh, okay. All right, so for those of you using a Windows machine, it's in the home ribbon. So this is a ribbon here. So the sorting should be there.
It's red like label the accounts and rearrange everything. So
Okay, I'm just going to stop the video here. So then we'll check any issues.